also have Aditya Shah, founder at Hercules Advisors, joining us this morning to give us a better understanding of the kind of numbers we've seen from SBI. Hi Aditya, morning, and largely a mixed set of numbers coming in from SBI. While it's been a beat on their operating profit and their overall net profit, you have a slight miss on the deposits and a comparatively bigger miss on the net interest income. Amid such a mixed bag, what are you making of the numbers? Where do you peg the stock could be today?
So steady set of numbers. If you look at the loan growth, it is at about 11%. The deposit growth is also at about 11%. A slight rise in the credit cost or the slippage ratio, but that is to be expected given the fact that the system is experiencing a lot of NPA on the unsecured side of the book. The PCR is also really very strong, and the bank has just raised good quantum of money, so the capital adequacy is also really very good. So from my perspective, a steady result, not as good as what ICICI Bank gave out. However, steady result, nothing to worry about. Of course, the NII in the shorter run will contract for a lot of banks as interest rate cut is passed on and the deposit rate repricing takes time. So from my perspective, steady result. I don't think there will be any major reaction on the stock as the stock is already priced in these kind of earnings. So from my perspective, steady results, no excitement, no disappointment, steady.
All right, so steady set of earnings coming in from SBI. But Aditya, since we are at the fag end of the earnings season, why don't you tell us what's your pecking order when it comes to the banking space right now?
If you look at the pecking order, number one would remain ICICI Bank. Extremely strong set of earnings. If you look back in hindsight, it is the only bank where the asset quality improved. All other banks saw a severe deterioration in the asset quality. So the top bank will continue to remain ICICI Bank. Then will come HDFC Bank and SBI. HDFC Bank still continues to deal under the merger pressures, and slowly and steadily only the margin improvement will come. And then finally will come the likes of Axis Bank. And one needs to keep an eye on how the turnaround also shapes out from IndusInd Bank, as the new management has now come in, and slowly and steadily all the cockroaches that were there will get cleaned up and the bank will start to move on. But ICICI is the new market leader and will continue to do so until HDFC Bank comes out of its merger profits.
Sure. Aditya, but I just want to get back to SBI as well. And yes, ICICI Bank clearly seems to be top on the pecking order for pretty much, it's a consensus view now on the street. But I just wanted to talk about SBI because the PAT, as we sense, is largely driven by the higher treasury gains. What sort of ROA trajectory do you now hope to see from SBI?
So I think ROA and ROE for private sector banks, for public sector banks and SBI, I think have topped out. Now banks need to be really very careful with respect to NPAs. The cycle of NPAs is starting off, and I think in the shorter term the ROAs and the ROEs will remain there. So from my perspective, ROAs and ROEs have peaked out. They will remain here for a period of time, after which a minor improvement could be seen. From my perspective, not too much enthused about any improvement per se. Time and again, SBI has not been able to maintain this kind of ROA. Mind you, SBI is at a 5 to 7 year high ROA and ROEs, and they've not been able to maintain. So if the bank is able to maintain these kinds of ROAs and ROEs, I think the stock price could then move from here on. Market would want continuity, market would want consistency from SBI, which has really been missing over the period of last 5 to 7 years.
Before we let you go, just want to come back on your view on ICICI Bank, an undisputed market leader right now, sure. But the news flow that we've received on ICICI Bank over the weekend, wherein they've hiked their minimum account balance to 50,000 from 10,000, give us a sense of what impact this could have on the bank in the near term. Any CASA impact if you're penciling in?
So, as I understand, that is only for new accounts and that is not for existing accounts per se. This would be a strategy where ICICI Bank would have thought that they want to move to a premium customer base per se. Still need to assess the impact on the CASA ratio, but I don't think it will be a very big material impact on the CASA the bank is trying to target premium customers and stay there. So from my perspective, a little bit of negative is there because minimum account in a metro is up to 50,000, which is not a small amount per se for every customer to maintain. A little bit of negative, but we'll need to study how will it impact the bank.
Okay, Aditya, great to have in your views. And yeah, Jay Kotak, co-head of Kotak 811 said